Your mortgage payment just went up again and again. And somehow, after 2 years of payments, you owe more than when you started. I'm looking at a file right now, a couple in their mid 30s, good jobs, thought they made the smart choice going variable. Their amortization, over 33 years. They'll be nearly 75 years old when their mortgage is paid off. And they're not alone. Over half of Canadians who picked variable rates with a fixed payment aren't even touching their principal anymore. Every dollar's going directly to interest. So if you're thinking about going variable right now, or you're already in one and wondering what the hell happened, this video might save you from the biggest financial mistake of your life. I'm going to show you 5 reasons why variable rates are a trap for most people. And by the end, you'll know exactly whether you're one of them. Because if one of these apply to you, you need to get out now. Before we dive in, I'm Dion Williams with Millions Mortgage. I work with Canadians all across the country helping homeowners get mortgage free faster. If you want to chat, click the link below and book a straight into my calendar. And hit the subscribe button so you don't miss any updates. Now, this is part 1 of a 3-part series. Today, we're covering why you shouldn't choose a variable rate. In part 2, I'll show you why fixed rates aren't always the answer either. And in part 3, we'll do a full breakdown, fixed versus variable, so you can make the smartest decision for your situation. Here's what's happening right now in the Canadian mortgage market that nobody's talking about. When rates were at historic lows, variable rate mortgages looked like a no-brainer. You saved money every month. Rates would stay low forever, right? But the Bank of Canada started hiking them. And hiking them. And hiking them. Some variable rate mortgages saw their interest rate jump by over 250% from their lowest point. No, I didn't mess up there. 250%. If you were paying 1.5%, you could be paying today as much as 5.25%. But here's where it gets brutal. If you had a variable rate mortgage with a fixed payment, and this is what the banks were pushing hard, your payment amount stayed the same even as rates exploded. Sounds like protection, right? Wrong. Because what actually happened is this. About 50% of these borrowers hit something called a trigger rate. That's the point where your entire monthly payment goes directly to interest. $0 are going to principal. You're not paying down your mortgage anymore. You're just renting your home from the bank. And for some people, it's even worse. They hit the trigger point, kept making payments, and their mortgage balance actually started growing. Negative amortization. They owe more now than when they started. But then you're probably thinking, okay, rates are high now, but they'll come back down eventually, right? Maybe, maybe not. And that's exactly the problem. Because what I'm about to show you isn't about whether rates go up or down. It's about whether you can survive the wait. Whether your relationship can survive it. Whether you even understand what you are signing up for. Let's get into it. Reason number 1, don't choose a variable rate mortgage if you believe interest rates are going to climb or even stay elevated. Look, I'm not going to predict or pretend to predict the future. Nobody, not the Bank of Canada, not your mom, not your dad, not your uncle, nobody knows what they're going to be doing 6 months from now. But here's what I do know. If your gut tells you rates aren't coming down anytime soon, and that thought makes your stomach turn, you're already in the wrong product. I had a conversation last week with a guy who's been in a variable for 3 years. He told me, Dion, every time I see the Bank of Canada announcement, I feel sick. I can't focus at work, and I'm constantly running numbers in my head. But then I asked him, can you afford the payments? He said yes. His income's solid. The payment increase hasn't broken him financially. So what's the real problem? It's the uncertainty, the lack of control, the feeling that he's gambling with his family's future every single month. Therefore, if you believe rates are going up, or if you just can't handle not knowing, locking into a fixed rate right now might be the smarter move. Now, fixed rates come with their own issues. Higher penalties if you break early, less flexibility. We'll cover that in part 2. But if you go fixed, you need to find a lender with low penalties and the ability to switch if rates drop later. That way, you're not trapped. And here's the pro tip. The big banks, they're terrible for this. They'll lock you in and make it expensive to leave. You need a lender who's built for flexibility. Now, reason number 2, this is the biggest one. Don't choose a variable rate if it's going to keep you up at night. I'm serious. This is the single most important factor in deciding between fixed and variable. It's not the math, it's not the rate projection, it's your peace of mind. Let me tell you about Mark. Mark came to me 2 years ago in a variable rate mortgage. He was a mess. He couldn't sleep, irritable with his kids. His wife told him she was worried about him. I looked at his file. His payment had gone up $200 a month. That's it. He could afford it. His income was strong. He had savings. But here was what was killing him. Every single month, he logged into his mortgage account. He saw the balance barely moving. He calculated how much went to interest versus principal. He projected it out, how long it would take to pay off at the current rate. He told me, Dion, I feel like I'm on a treadmill. I'm running as fast as I can and I'm not getting anywhere. But then I asked him, why did you choose variable in the first place? He said his bank told him it was a smart move and that he'd save money, that rates wouldn't go up that much. So here's what we did. We switched him to a fixed rate. His payment actually went down by another $50 a month, but the relief was immediate. He called me 2 weeks later and said, I slept through the night for the first time in months. My wife noticed, I feel like I can breathe again. Therefore, if you're stressed by the thought of rising payments, if you're the type of person who needs to know exactly what's coming, variable rates are not for you. Your mental health is worth way more than saving a few basis points on interest. Now, before we get into jump number 3, if you want help to figure out if a fixed rate actually makes sense for your situation, I've built a mortgage calculator that shows you exactly what your payment would look like under different scenarios. Fixed versus variable, different terms, different rates. It factors your income, your debts, your goals. It takes about 2 minutes and it'll give you clarity on what actually you can afford and what's going to keep you up at night. The link is in the description below. Go check it out, run the numbers, and then come back. Reason number 3 is critical, especially if you're in a relationship. And if you ignore this one, it could cost you more than money. Reason number 3, if your spouse or partner isn't comfortable with a variable rate mortgage, don't take it. End of story. I've seen this destroy relationships. One partner is more risk tolerant. They like the idea of saving money if rates drop. They're optimistic. They believe in the long-term play. The other partner is risk averse. They want stability. They want to know exactly what the payment will be every month. They don't want to gamble with the roof over their head or their kids' heads. But then rates start climbing, and suddenly every mortgage payment becomes a fight. Every Bank of Canada announcement is a reminder of the disagreement. One person says, I told you we should have gone fixed. The other says, it'll come back down, just wait. But the resentment builds. I had a couple last year. They were barely speaking to each other. The husband had pushed variable. The wife wanted fixed. Rates went up. Their payment went up by $400 a month. She looked at him and said, every time I make a payment, I think about how you didn't listen to me. Therefore, if one of you is uncomfortable with variable rate, you both need to be on the same page. This is the biggest financial decision of your life. It's not worth the strain on your relationship. Choose the mortgage that lets both of you sleep at night. Because money fights are one of the top reasons couples split up. And a variable rate mortgage can spark the light that fire would need. Reason number 4, pure strategy. If you can get a short-term fixed rate that's cheaper or close to the variable rate, that's probably the better move. Here's why. Let's say variable rates are sitting at about 5%, but you lock in a 2 or 3 year rate, fixed rate at 4.5 or 5%. You're getting stability without giving up much or anything on rate. But here's the real advantage. You're locked in not for 5 years. You're not gambling on rates dropping. You're playing it smart. In 2 or 3 years, you get to reassess. If rates have dropped, you switch to a variable. If they stayed high, you can lock in again. You're in control. I did this myself back in 2017. I saw rates starting to climb. My partner and I locked in a short-term fixed. We wrote out the increase. Then, when rates dropped in 2020, we jumped back into a variable. But here's the key. You need to understand the penalties. Short-term fixed rates can still have penalties if you break early, but they're usually way lower than a long-term fixed rate. And you need a lender who will let you switch without gouging you on fees. Therefore, if the numbers are close, short-term fix gives you the best of both worlds. Stability now and flexibility later. You're not betting on rates. You're hedging. All right, last one. Reason number 5. Don't pick a variable rate if you don't fully understand the different types. Because here's what happens to thousands of Canadians over the last few years. They went to their bank. The bank said, hey, variable rates are lower. You'll save money. And don't worry, we'll keep your payment fixed so you have stability. Sounds great, right? But here's what they didn't explain. When rates go up and your payment stays the same, the extra interest has to come from somewhere. So instead of paying down your principal, more and more of your payment goes to interest. And eventually, you'll hit the trigger rate. That's where 100% of your payment is in interest, 0 principal. But then it gets worse. People blow past that trigger rate. And that trigger point, that's when your payment isn't covering the interest anymore. The unpaid interest gets added to your mortgage balance. Your mortgage is growing, you owe more than you borrowed. That couple I mentioned at the start, that's what happened to them. A 35-year amortization, and they're 35 years old. But then there's another trap. Some lenders offer discount variables, rate mortgages, with something called a bona fide sales clause. Sounds fancy. What it actually means is you can't switch lenders to get a better rate unless you sell your house. You're stuck, trapped in a product that's costing you more every month, and you can't get out without selling your home. Therefore, the key is to fully understand what kind of variable rate mortgage you're getting into. Are the payments adjustable or fixed? What happens if you hit the trigger rate? Can you switch lenders without a penalty? What's in the fine print? If you don't know the answer to these questions, you're setting yourself up for a disaster. And in the mortgage world, disasters are expensive, extremely expensive. So let's recap. You have 5 reasons why a variable rate mortgage might not be the right choice for you. If you believe rates will be climbing or stay elevated. If it's going to keep you up at night. If your partner isn't comfortable with it. If short-term fixed rates are comparable. And lastly, if you don't fully understand the different types. Now, does this mean variable rates are always bad? No. There are situations where they make sense. That's what we'll cover in part 2 of this series. Why you shouldn't choose a fixed rate mortgage. Because here's the thing, fixed rates have their own traps. Higher penalties, less flexibility, and in some cases, it could end up paying way more over the life of your mortgage. And in part 3, we'll do a full breakdown, fixed versus variable, so you can confidently choose the mortgage that fits your life best. So if this helped you or you found value in this, please hit that like button and the subscribe button. And while you're at it, hit the little bell. And if you do want to book a call with me or someone from my team to see how we could restructure your payments and see if you can pay off some debt or just look at a different scenario in general, click the link below and you can book an appointment with me. It'll go directly to my calendar and we'll meet on a Google Meet. Thanks for watching.